Hey everyone, welcome back to the channel. Today, I've got the latest updates on the stock market and some key economic indicators that could impact your investments. First up, let's talk about the major indices. The S&P 500 has been on a roller coaster ride this week, closing up 1.2% yesterday after a dip earlier. The Dow Jones Industrial Average is also showing some resilience, gaining 0.8% after positive earnings reports from major companies like Apple and Microsoft. Meanwhile, the Nasdaq continues to outperform, up 1.5%, driven by strong tech sector performance. Now onto the sectors. The tech sector remains the darling of the market, with major gains in cloud computing and AI stocks. Financials are also seeing a boost, particularly banks, as expectations for interest rate hikes rise. On the flip side, consumer discretionary stocks are under pressure amid concerns about slowing consumer spending. Speaking of interest rates, the Federal Reserve recently hinted at a possible rate hike in the near future. This move is largely driven by persistent inflation, which remains stubbornly high at 3.8%. Higher interest rates can cool down the economy, but also impact borrowing costs for businesses and consumers alike. Inflation is another hot topic. The latest Consumer Price Index report showed a 0.4% increase last month, signaling ongoing price pressures. Energy prices, in particular, have seen a spike, which could trickle down to various sectors. This is something investors should keep a close eye on, as it could affect both corporate earnings and consumer spending. Now, let's talk about some notable financial events. Tesla's recent earnings call revealed ambitious plans for future growth, causing a surge in its stock price. On the other hand, Amazon has faced some headwinds with regulatory scrutiny and labor issues, which has put some pressure on its stock. Internationally, there's growing concern about the economic slowdown in China. The country's GDP growth has been underwhelming, which could have ripple effects on global markets. Emerging markets are also feeling the strain, particularly those heavily reliant on exports to China. To wrap things up, let's consider what all this means for investors. With the potential for interest rate hikes and persistent inflation, it's a good time to reevaluate your investment strategy. Diversification remains key, and keeping an eye on sectors that can weather economic fluctuations is crucial. All right, that's it for today's update. If you found this video helpful, don't forget to hit the like button and subscribe to the channel for more updates. Also, leave a comment below with your thoughts on the current market trends. Thanks for watching, and I'll see you in the next video.